Welcome to Looking at the Markets with David Modell. I wanted to use this video to explain the difference between intrinsic value of an option and the extrinsic or time value of an option. Some people call it extrinsic value, some people call it time value. It's the same thing. It's the opposite of the intrinsic value. And you really need to know these things if you're going to trade options. So I'm going to use Alibaba call options as an example here to illustrate it. And these are expiring next week, December 2nd, 2016. And we're going to pretend that right now Alibaba is trading at $93 a share. It's actually 93.01, but we're going to pretend this is exactly 93 just for illustrative purposes. Okay, so let's say you purchased or let's say you owned a $90 strike Alibaba call option, all right, expiring in 1 week on December 2nd, 2016. Okay, so this has, and we're going to pretend again this is exactly 93, that Alibaba is currently trading at $93 a share. All right, well, this would give you the right, but not the obligation, the right to purchase 100 shares of Alibaba stock at $90. Okay, and that's pretty good considering that's quite a discount, quite a bargain, considering that right now it's trading at around $93 a share. Because think about it, if you owned this call option, you could exercise your right to buy 100 shares of Alibaba at $90 a share, and then you could sell it right now. You could turn it around and sell it for $93 a share for a profit of $3 per share. And so that's why the 90 strike call right now has $3 of intrinsic value, because that means that right now you could sell, if you owned this call option, you could sell all those stocks, 100 shares, for a $3 profit right now. So that's $3 of real value, actual internal value or intrinsic value of this this call option. Okay. So these call options right now are selling not for $3, but for $3.35. Aha, so there's an extra 35 cents there. $3 worth of intrinsic value, but also 35 more cents worth of extrinsic value or time value. Okay, so how do you get the intrinsic value? Well, first of all, only in the money options, which means call options where the strike price is less than the current price. Only in the money options have any intrinsic value at all. Okay, and you get that number by taking the current stock price and subtracting the strike price if it's a call option. All right, so how do you get the extrinsic or time value? You take that intrinsic value, which let's say is $3 here. Okay, so you take the current price of the option, $3.35, and you subtract the intrinsic value, and that's how you get the time or extrinsic value. Which so that would be $3.35 minus $3. That would be 35 cents per share of extrinsic or time value. So what does that extra 35 cents represent? What are you paying for? You can easily understand why it would be $3. Okay, because you could turn that around and sell the shares and make a $3 profit if you owned the 90 strike calls. So why are you paying a little bit more? Well, that 35 cents, that's extrinsic or time value. That's the value of the potential or the hope or the possibility that before expiration, which is not for another week, the hope or the potential that Alibaba stock might go up some more, that it might go up, okay, which would raise the value of your call option. Okay, you might buy it at $3.35 a share, and if Alibaba stock went up, it might go up to $4 a share, or $4.50 or $5 or even more. So you're paying 35 cents a share for the potential, the possibility, the hope that within the next week, before expiration or at expiration, that the price of both Alibaba stock and your call option will go up. Now be aware that when expiration hits, all of the extrinsic value or time value, it evaporates. They're gone. It's gone. Okay, Because think about it, upon expiration, when this expires, there's no time value left because there's no time left. There's no potential or possibility or hope that Alibaba stock will go up anymore past the expiration date, because here it is. It's here. When that day comes, when that time comes, when it expires, there's no more hope of it going up anymore before expiration, because expiration is here. Okay, so that 35 cents worth of time value will dwindle over time until expiration hits. All right. So let's look at an at the money call option. All right, which would be 93, the 93 call, because right now it's we're going to say it's trading at 93 exactly. We're going to pretend. All right, and so at the money options have no extrinsic or time value at all. I apologize. I said the wrong thing. They have no intrinsic value. At the money options have no intrinsic value. Okay, because you could. What are you going to buy the 93 strike call, and then that'll give you the right to buy 100 shares at 93. Okay, and then you're going to turn around and sell it for exactly $93 on the open market. What good would that do you? You would make no profit. Okay, so it has no intrinsic value. So at the money options are all extrinsic value. It's all time value. It's only time value. That's all it is. So these 93 strike at the money call options, they're $1.26 per share. That's the price, and that's all time value. Okay, that's all hope and potential and possibility that Alibaba stock might go up and that your call options might go up before expiration on December 2nd in this case. Okay, and out of the money call options also have no intrinsic value. Okay, this is these 96 strike call options. They're all extrinsic or time value, because what are you going to buy the right to sell them at 96? Okay, and then to buy the right to buy them at 96, and then exercise that and then sell them on the open market for $93 for a $3 per share loss. You would never do that. So they have no intrinsic value, but they do have these have 28 cents worth of extrinsic or time value, and that's, again, you're paying for the hope or the potential or possibility that Alibaba might go up, and therefore your call option might go up. All right, so put options pretty much work the same. If you have an in the money put option, these 96 strike put options have $3 worth of intrinsic value, and I got that by taking the strike price and subtracting the current stock price for put options. That'll get you the intrinsic value, because if you owned the 96 strike put, that means that you could buy Alibaba for $93 a share, and it would give you the put would give you the right to sell them, turn them around and sell them for $96 a share, therefore giving you a $3 per share profit. So you can see why these have a $3 intrinsic value, because they're worth $3 right now. And they added on 20 cents worth of extrinsic or time value, and that 20 cents means you're paying 20 cents per share for the hope or the possibility or potential that Alibaba stock might go down before December 2nd expiration. Okay, and therefore raise the price of your put option. All right, and at the money put option would have no intrinsic value, because why would you buy 100 shares of Alibaba stock at $93 and then buy the right to turn them around and sell them at $93 a share? That would be no profit. But they do have extrinsic or time value, $1.16 per share worth. That's what you would be paying for. All that money would be just for extrinsic or time value, which you're paying for the possibility or potential that Alibaba stock might go down before expiration, and therefore your put option might go up in value. And then out of the money put options have no intrinsic value, because why would you buy the stock at 93 and then sell it at 90? You would lose $3 a share. So they have no intrinsic value, but these do have 32 cents worth of of extrinsic or time value, which again is the hope or potential or possibility that Alibaba stock might go down, or in this case go down some more, because it already went down a little bit on Friday, before December 2nd. Okay, so I hope that is helpful. I hope that is a good example of what the difference is between intrinsic value, which is what what your option is really worth right now. If you were to if it was to expire right now, what would it be worth? Okay, how far in the money is it? In other words, that's the intrinsic value. How deeply in the money is your option? And only in the money options have intrinsic value. And then whatever's left after the intrinsic value is taken out or subtracted from the current options price, that is the extrinsic or time value, and that's just you paying for, if you buy the option, that's you paying for the potential that that if it's a call option, that the stock might go up, or the potential for the stock to go down if you bought a put option. All right. So if you'd like some more help with stocks, options, trading, or investing, or any aspect of finance, feel free to send me an email anytime. My email address is davidmodell@gmail.com. If you like this video, if you found it helpful, please give it a thumbs up on YouTube and leave comments. Also, if you haven't done this already, please subscribe to my YouTube channel. That way you can receive the latest updates on my financial educational content. Thank you so much. I really appreciate you watching and listening to this video, and I'll talk to you soon.